So we're looking here at this pound yen. We see bearish divergence. This is a 1 hour chart. And again, this is what I'm looking at the open. We're setting up nicely for a potential counter trend divergence trade. Now let's zoom out a little bit and look at our sore thumb highs and lows. Let's get rid of this. Let's get rid of this. Pretty obvious in the context of current price to see sore thumb low, sore thumb low, sore thumb high. We did our harmonic analysis, but that doesn't hold much water in this case because this is news related, something we couldn't predict. Yeah, all yen, yeah, risk on created it. All yen pairs went north. Okay, very good. Thank you, Patrick. And guys, I'll be honest, you see things I don't see. You live in different parts of the world. You get news. I mean, I'm here, I'm not here. You're studying certain fundamentals. I'm looking at certain fundamentals. I mean, it's impossible for us to absorb all of it and see it all at one time. The reason these forums are great is because you guys can add. You can say, like Patrick did, risk and created it. All yen pairs went north. Yeah, they did. They rallied all day. I was talking about the Greece situation and the euro, and I'll get to that in a minute. However, this is the kind of setup I'm looking for at the open. What will happen is this was New York and London, and all the people in Japan that had short positions on will drive price down to cover their shorts because they're all drawn down or stopped out, but this will drive down. Now, where does our fib analysis begin? Longer term, from this new structure high, this is a new structure high in context of the previous highs right here. Bye, Agnet. See ya. It didn't take out this high, but it took out this high. But in the context of this rally, this is a new structure high. So remember context. Shorter term, I'm using this sore thumb low to this sore thumb high. So I can, with a reasonable expectation, if I get a confirming reversal pattern, then I will look for the market to get short back down to the 382. Do I have any structure here? Well, I've got a mild consolidation zone of 5 hours late on Wednesday. I've got some pretty significant support and resistance down here at the 50% retracement of this last rally. So this is what I'm looking at. This is what I look for. Bearish divergence, market way oversold, confirming reversal pattern, getting short down to the 382. Can you all see that? Anyone? You still with me? Kim, Ken, Mark, Patrick. Yeah. Okay, cool. So on Sunday night, when you guys sit down, look at your trading time frame. This is my trading time frame. Now let's look at the 4-hour chart. I can look left and see, yeah, look, resistance, consolidation. So, and that bearish candle on the 1 hour in that price action is creating a bearish engulfing bar. Not yet, not yet. We want to see this engulfed, but I'm being rejected at my trend line. Trend line still bearish. So I'm trading with the higher prevailing trend. Current trend, clearly bullish. Bullish rotation, everything above the 50, etc., etc. But prevailing trend on the higher time frame, bearish. Okay, cool. What pairs are, I just wanted to show you guys what I'm looking at after these massive moves that if you miss them, you don't need to freak out. You don't need to beat yourself up. You just go, okay, what is happening now that I can take advantage of this move? What do I see? What does it mean? What do I do? And we're getting to a point here where we have almost a perfect counter trend setup. Now, if the market opens and this thing gaps up here and rallies another 100 pips, I move on. I have to wait for that scenario to play out. But as it stands, what I see right now is this. What pairs are you guys looking at? Anyone? Anyone looking at any particular trades? Nothing. Okay. Let's look here at the pound Aussie. Okay. Here is the pattern I want you guys to really get familiar with. Again, this is really, really simple. Morning star, evening star. You've got an inverted hammer with a candle of the opposite color. Okay? TDI well overbought. Nice little opportunity for a rally. This is late on a Friday. But just familiarize yourself with these candle patterns. Okay? Double bottom, engulfing bar. Bearish, evening star here. Nice little pin bar here, double bottom, bullish divergence. I mean, just spend an hour, commit to spending an hour every night just looking at candles and candle patterns. You can look at this on a Heikin Ashi too. Where does the trend weaken? Where does the trend weaken? Well, look, I'm overbought here. I don't want to oversimplify this, but it's kind of like what goes up must come down. So be scanning your portfolio and say, what is happening? Look, I've retested this previous high, a 1, 2, 3 triple top. Do I have any bearish divergence? Well, look at this daily chart. Look at this range, 272. And this is kind of scary. Initially this can be too exciting. You're like, oh my God, look at this, 272 pips a day. But there's a point of diminishing returns when you look at the fact that you're going to need a 400 pip stop to protect yourself with this kind of volatility. So there is an optimal level of a daily range. What it is for each pair, I don't know exactly. But in this particular case, I'd like this to be about 150 to 175. 272, that's volatility, man. And you play like this. Let me use some regular candles here and we'll go to this. Let's zoom in. I mean, you got to have ice in your veins to be able to deal with this on this higher time frame. I mean, this thing sells off 241 pips, and the very next day rallies 380 pips. And this has a 10 to 12 pip spread depending on where you live and where you trade. This is much better on a 4-hour chart, engulfing bar to the downside. 1-hour chart, here's that pattern we see time and time again. A decision point, sore thumb high, sore thumb low at a double bottom, overbought. We don't have the perfect candle pattern here. We like to see a double set of waves and our market baseline into the extreme, create that high probability counter trend trade. 30-minute chart, not quite, but a nice engulfing bar here. We have a 1, 2, 3 outside return to the downside, looking at a potential ABCD completion. That's pretty sloppy. Let's clean that up. Right here. And that little trade. But where do you get short here, Rick? What's going on? You got to watch for a candle pattern. This little inside bar, not convincing enough for me. I like to see this market baseline up here, and I'm going to miss a portion of this trade because I'm not that aggressive. An aggressive trader would get short on the close of this little inside bar. Let's pull our fibs in, swing to swing, sore thumb high, sore thumb low in the context of current price, even though we've created part of a double bottom here in a higher time frame. Sore thumb low to sore thumb high, bearish divergence. Nope, not bearish divergence. Why not? Well, price didn't go up as this wave down. We've literally just got bearish momentum. And now we have this. I don't know what happened. What happened late on Friday? All of a sudden the market kind of went haywire, and you've got, look at this candle. I mean, this is very characteristic of a Friday. Kind of this lilting sell off after a massive rally. But this, something happened. Do you guys know? I just saw, I just sat down in the afternoon and this just went haywire. Anyway, something about the Aussie. Now, the Aussie and the Kiwi are highly correlated with China. And you have seen as the Aussie sells off, pound Aussie and euro Aussie have this volatility. If you followed the news at all, you're also aware that China has had a record sell off in the market. And because China and Kiwi, and New Zealand and Australia are trading partners with industrial commodities like iron ore and metals and other industrial type mining operations, the Aussie and Kiwi have been slammed against the wall. And as a result, it creates volatility, especially these massive daily ranges on the euro Aussie, euro Kiwi, pound Kiwi. And that's why I said that, actually, like I said, a good friend of mine who's a trader said these, when they move, they kick like a mule. And that's the mule right there. But something happened Friday afternoon. But I'm showing you this sore thumb high to sore thumb low. Not an optimal setup. We don't have any divergence, but we are clearly oversold. And we've actually got divergence on our market baseline. Market baseline's moving up and our oscillator, or our price is moving down. Our market baseline up, price moving down. But a nice little scalp trade there on a 30-minute chart if you're aggressive for 50 pips. And you can apply this type of analysis, guys, on any and every time frame. Patience and just doing the same thing day in and day out. Let's look at these. Well, these are pretty much the same. You can see, if just at a glance, you can see this pound Kiwi, massive sell-off, massive rally. Pound Aussie, massive sell-off, massive rally. Euro Aussie, just euro killing it against the Aussie. Now we created new structure high on Friday. New structure high on Friday here. We broke out of this channel. I'm just going to keep my eye on those. Dollar CAD is this Canadian loonie. If you read the news, fundamental analysis is that the Canadian loonie has been primarily ignored by institutional traders, and now for some reason it's supposedly going to have some renewed appeal. So the word on the street is, be prepared to buy loonies. And all the CAD crosses now that you can see, Euro CAD, Pound CAD, Aussie CAD, not so much the Aussie because it's been slammed by the China stock market, but Euro, Pound, and Dollar are supposed to depreciate against the loonie. I'll believe it when I see it. But anyway, just kind of something to keep in the back of your mind if you trade the CAD crosses. And this, my mouse is, must be time for batteries. A nice ABCD completion. Now let me not label this. When you guys look at your chart, and I kind of gave this away, this is a bearish Gartley mark right here, this bearish Gartley pattern. Yeah, okay, cool. Thanks for that. I appreciate it. Yeah, but when I look at this chart, guys, this harmonic move, I mean, is just so ridiculous to me. It just literally stands out. I mean, it's just, and then as Mark said, if we complete X to A, bearish Gartley pattern. This must be at the 886 or 881. And then what I like to see, even with the Gartley pattern, that is one additional confirmation, but I like to see this market baseline up here, and I like to see a reversal candle pattern. Some of you more aggressive traders have already gotten short or will be short, I don't know, in the 4 hour. Yeah, this right here, see the 4 hour, so we looked at that. That right there is what I like to see. Market baseline, we come out of here, we've got the bearish divergence. What is going on? Bearish divergence. We're undecided here, guys, for about a day and a half. I would predict 382, some nice support right above the 382, and at the 618. Now I'm taking this whole 3 weeks, almost this whole month long term on a 4 hour chart. If I'm a swing trader and look left at the 618, we have some nice resistance in that zone and nice support there. So very, very nice setup. And again, our TDI in an optimal position as well. So that's the dollar CAD. So just put that on your list of potential trades to watch. Where would you get short? Well, you've missed this signal on the 4 hour already. This cross, right? This was your sell signal on Friday. Some of you don't trade Friday or don't want to carry a trade over the weekend. On your 1 hour chart, you missed the signal as well, and this looks like a channel. We're coming into some structure here. We're almost oversold. Let's look at our 15-minute chart. And we've broken below, and at late Friday closed below all of this channel as well. I would look for this to continue to sell off, but again, because we missed the move, we missed the initial entry, that's going to be a pretty big stop. We'll have to see, because what this will do is this 15-minute will come down here, be oversold, and bounce back up. Let's put our, put our fibs on here. I gotta put some new batteries in this mouse. I don't know when this sell-off is going to continue. If I look left, this is that little support consolidation zone. So this is again trying to get in, trying to get a great price, good entry on this sell-off, because a lot of times what will happen is you'll get short here on this smaller time frame, and because you're not used to a drawdown, you'll be drawn down 50 pips to here. If this retraces to the 618, you guys will kind of freak out a little bit. But in the context of that higher time frame, you would want to get short here and get a good price and put your stop above 20 pips above structure here. And then look at, back to our 4 hour, here's our first target. Let's go back to that 15-minute. And this is where you get the really good, was I on a 30 or 15? Sorry guys. This is where you get that really good risk profile. So you got, this is your risk and this is your return. So that's pretty nice. So watch these. A good friend of mine says, yeah, I know you do top-down analysis, but I also do bottom-up analysis. And there's a friend of ours who's been in our trade room for a long time. He doesn't happen to be in here. His name's Jose, and he's from the UK. And he also is quick to point out and has really reinforce this idea to me as well, and that is that you can continually scan between time frames, both trade trading with the prevailing trend using top-down analysis, but in the context of current price, use that prevailing trend to tighten up your entries on the smaller time frames. So, for example, you're catching this retrace on the dollar CAD back up on the 15-minute chart to get a killer entry on a potential pattern that could just, oh, I'm sorry, that's even incorrect. You could just fall off all the way down to here. So like a 1 to 10 risk profile. And I see these traders that I know that are friends of mine have kind of perfected these entries on a smaller time frame to get a great price and get a really good risk profile. So anyway, that's our 4-hour dollar CAD, something to also consider. Anything else that you guys are looking at for the open? Okay, I'm looking at this pound kiwi. Here's our daily chart. Again, massive volatility. And this is not a perfect setup, but a good setup. I don't want to get into the reasons I didn't take this trade, but a 350 pip stop is will physically make some of you guys ill. And it's a long story, but one of the reasons that I don't take these trades in the trade copier is because of that reason. Because if this thing whips up 250 pips, people are going to freak out. And so we're not quite there yet, but those are the kind of trades that we need to get used to because the payoff is pretty significant. And then the other thing to consider is this massive volatility that we're dealing with. We may come up and retest this. This thing rallied on Friday. We could potentially retrace all the way back up here to the 2 spot 350, and that's 683 pips. And most of you that don't trade the daily chart, that would literally give you heart palpitations. And so, however, on a smaller time frame, on the 4-hour, I don't know if this rally is over, but we're coming into the 618 here. TDI came off the bottom. This is actually a very nice trade. Market baseline still not perfect, but we have some nice bullish divergence and a very steep cross coming off of this oversold area. And on a 4-hour chart, this thing rallied massively on Friday. So pretty nice setup there. And you can see the pound. Just look at all these pound pairs. You can just see the gray, which means the pound was strong, and clearly the euro was strong against all crosses on that Greek news on Friday. And those Brits, they love to defend their currency, man. They will stand behind that sterling. So anytime you see a massive sell-off, you can, like this right here, they're just loading up for this rally. I've been watching this Kiwi yen forever, and it started to take off. And amazing to me, we have this drop like a rock on Friday on continued China news, and this thing just really can't get that much steam. But look at this depreciation that's occurred since back in June. 800 pips. And look at the Aussie against the dollar and the yen. I mean, the same thing. 600 pips. Finally got a break a little bit on Friday. and then started to sell off here, and that's when those pound Aussie and euro Aussie pairs just started to go crazy to the upside. But it's interesting to me is if you look at the correlation, the Aussie dropped 70 pips and the pound Aussie and euro Aussie rallied 280, 300 pips. I mean, is that a disproportionate amount of leverage or what? It's certainly not a one-to-one. Anything else you guys want to discuss? Okay. I don't have anything else to say for this session if you guys don't have any more questions. So I'm going to call it a day and get focused for the open. And if there's anything else you need during the week, just please feel free to email me. Thanks again for being here, guys, and I'll see you soon. Let me know if you need anything. Shoot me any emails, and let's stay in touch. Let me know how you're doing and keep me posted on your progress. Okay?